Greetings, February 5th, Wednesday, and the market looked pretty good today. So it looks like the market is A-OK. The bull is back and seems like it just wants to go higher, regardless of the earnings miss by Google. We've got two important ones tomorrow, Eli Lilly and Amazon. Qualcomm reported tonight. We'll look at that in a minute. So let's take a look at what the market did. I also have a few things to go over, so I'm going to try to get through this as quickly as I can. But as always, I am not a financial advisor. This is for education purposes only. You need to understand your own trading and investing style, and past performance does not guarantee future results. So if we go to the home page, first thing that you should notice is that the market bias ticked down slightly, but not significantly. And the trend still is trending up after this big uptrend back here. So let's take a look at a couple of things. Look at the S&P first. Has not reached back to its previous highs or broken out of that resistance. So it needs to do that if it's going to go higher. And I've said before, it's trading in between this sideways channel, and it will break out at some point, either higher or lower. So the top one is at 6,100. The bottom was at 5,850. So those are the levels that we'll be watching. Make this a little bit bigger. There you go. So went up today. So I had a nice day. Market looked like it was okay today. We'll look at the NASDAQ NDX. Since Google didn't do such a great job last night, but NASDAQ actually went up. NASDAQ 100, again, not back to the previous highs. And in fact, what I can do now is draw a trend line across the tops here. And that's roughly what we're looking at. So we need to break out of that. If we break out of that, we are likely going much higher, especially if we break out of the highs over here. So look good today. We'll look at Google in a minute. Let's take a look at the XLC, which is where Google was located. And yeah, it went down today, but look at this big run that it's had. So this one has just gone up, just almost straight up. So it needed to take a break anyway. So pull back and ended the day with a little hammer right there. So might actually end up being bullish. We can also go back over to the charts page for subscribers. By the way, this is my website, breakpointtrading.net. And you can get to earnings right from there. We'll look at that in a minute. But let's go down and take a look at the internet group. Was actually in the top 10 last week. And you can see right there, it's just had a fantastic run higher, and it didn't even go below the 21-day today. So it is still in an uptrend, has not really broken down yet. So that's good news. Let's take a look at automobiles, and we'll look at Tesla. Automobiles is starting to break down. So it actually has a medium-term bear signal right there. It's starting to break down. That's typically where Tesla is located. So if we look at Tesla, looks exactly the same. Isn't that something? So there's Tesla. There's the automobile industry. Practically no difference. So as Tesla goes, so goes automobiles. We'll take a look at two others. We'll look at semiconductors up here. This one also looks exactly like NVIDIA. So there's semis. There's NVIDIA. Pretty similar, huh? So as NVIDIA goes, so go semis. NVIDIA is sitting down here after that big sell-off, trying to make a comeback, and now above the 200-day moving average, which is good, although volume is less than average right now. But we'll see if NVIDIA can continue to go higher. It reports on the 26th, so it's got about 3 weeks still. And it usually runs up into earnings. So I suspect it's going to probably try to make a run back up to the 50-day moving average, about 135. Right now it's at 125. The other one is software. Software, somebody actually asked me about this. Software has been in an upward sloping channel, and it's going sideways. It's not really doing too much right now, but I think a lot of the focus is going to shift from the hardware vendors to the software vendors as it relates to AI. So keep an eye on that. One is AI, of course. This one is just beginning to move up. Palantir, of course, everyone knows Palantir. Sorry, I'm losing my voice here. That's in the software group. So Palantir had a great run after earnings. AI is one to keep an eye on. They report on also on the 26th. So same day as NVIDIA, interestingly. So keep an eye on that one as well. Okay, let's jump back over here, take a look at Bitcoin as I always do every night, and see what Bitcoin is up to. Oh, I need to go back to the market bias matrix. You can see here there's a couple of greens, few reds, more reds than greens. That's the reason it ticked down slightly, but not significantly. So we'll see what happens tomorrow. Bitcoin. There's Bitcoin. Bitcoin went down today. So went down to 96.5. The high was 99. Couldn't quite break 100,000. So even though technology did okay, the NASDAQ 100 actually went up, but Bitcoin went the opposite direction. So I had a question from somebody to not only compare Bitcoin, but also to look at Ethereum. So the way I'm going to do this is I'm going to go over here on stock charts to gallery view, and I'm going to put in Bitcoin, comma, Ethereum, ETH, USD. And this allows me to compare two charts side by side. So it shows me the intraday view. And you can see they look fairly similar. Ethereum and both Bitcoin is trending down. Ethereum looks more like sideways movement right now. Down below is the VIX. So here's the daily view. This is the important one. This one and the weekly view are the important ones. So here's the daily view. And you can see Bitcoin over here, definitely just going sideways. This goes back about 7 months, I think. But Ethereum clearly is doing worse than Bitcoin. So Ethereum seems to be falling apart over here, even as Bitcoin seems to be holding up pretty well. So that's not a good look for Ethereum. And if we look at the weekly view, you can see it even better. So here's Bitcoin again, just kind of going sideways. Momentum is heading lower, however. Oops, go back to that. Momentum on the weekly is heading lower. Let me see what it's doing on the daily. Yeah, the daily, it just went below zero. So it's confirming a downtrend right now. And it's below the cloud. Ethereum has been below the cloud and has been below zero for quite a while, all the way back to December. So Ethereum has been underperforming for quite a while now. It gave signals. Of course, Bitcoin gave one back here in December also, but then bounced back. But Ethereum did not. And down here on the weekly, it's even more clear. So Ethereum looks like the weaker of the two, for sure. We'll see how things go with both of these, but Ethereum looks like it had a huge sell-off this week. Of course, we're only 3 days into it, but it went below the 200-week moving average and then bounced all the way back. So it came all the way almost back to where it started. We'll see if that will continue for the rest of the week. So that's what it looks like for Ethereum and Bitcoin. Another couple more that people ask me about that I'll take a look at. One is CrowdStrike. And comment was, is this a cup and handle? And it's sort of a cup and handle. Let me show you. If I wouldn't call it necessarily a clear cup and handle. So it might be. So there's the resistance right there. So here's the cup, here's the handle. So yeah, that probably would qualify. And then it broke out right here last week. So it broke out, pulled back, tested the resistance, and then took off. So this one might be heading much higher from here. The target is probably 250 to 390. It's about 140 points. So It could go up to 525, 530 from here, another 100 points or more. So that one looks pretty interesting. Another one was NXT. We'll look at NXT, which pulled back today. So NXT had a big pullback. This is earnings right here. Huge gap up at earnings. If it gaps down, that will not be good. This is a bearish island formation if it gaps down. If it just drifts lower, that would be okay. Will it close the gap? I probably doubt that will happen. I think more likely what's going to happen is it actually has kind of an inverse head and shoulders, but I would be more likely to see it do something like this, right about 44, which is where the 21 day is, and the 200 day is down here at about 40, a little more than 42. So somewhere in this range, around 44, 43 to 45, somewhere in that range. You can see it, you can call it a triple, actually a double bottom perhaps, or it might even be an inverted head and shoulders. So there's the left shoulder, the head is even lower. The right shoulder is a little higher, but equal to the left shoulder. And that means this is roughly about 31, let's call it, to 44. So that's, 13 points. So the target for that is 57, and it made it up to 52. 57 would be right up here. So I wouldn't be surprised if it actually gets up to 57. But it looks like it's going to move down first before it does that. So it needs to anyway. It needs to consolidate all those gains. There's what it looks like a little closer up. So right down here at the 200 day, you can see the 50 day is rising to meet it. The 21 is right there. So somewhere in this range, 42 to 44, somewhere around there, probably is where it's going to go. If you're looking to get in, you might just put a limit buy order down here at about 42. And because if it does do that, if it does close this gap, it's probably going to do it really fast. It's probably going to gap down or sell off very quickly when it gets closer to here. And when it closes the gap or gets to the 200 or the 50, something like that, it'll bounce back right away because it had very strong earnings. So I think there are probably people down here, probably have orders already down there. So that's my take on NXT. If you look at it on a weekly chart, again, you can sort of see where the support levels are. It's right. Resistance is right about where it was last week. So it's pulling back from there. And then the 50 day now is at 44.40. So somewhere right around 42, 44 is probably where it's headed to, and then may bounce from there. All right. I also had some questions on gold. So for this, I'm going to go to the charts page on the website. And I added a few charts down here on gold. One is, I'll just look at all of these right here, gold versus the US dollar. The question was gold and silver. So I'll look at gold first. So this basically shows you gold versus the dollar. If you see it in this orange yellow color, that means gold is outperforming the dollar. And if you see it in the green color, green like the dollar, then the dollar is outperforming gold. And right now, gold is just beginning to outperform. So you can see down here, this is a price performance chart down here. So gold versus the S&P. Here's the zero line. So if it's above zero, that means it is outperforming the S&P right now. So gold looks pretty good. And if we look at gold, let's look at silver versus the dollar. So we'll look at each of these. Same kind of thing. If it's silver, then silver is outperforming. If it's green, then the dollar is outperforming. And you can see right over here that silver is just beginning to outperform. And down here, it is versus the S&P, it is above zero as well. So that one is outperforming. Now we'll look at gold versus the S&P instead of the dollar. Now in this case, I went back about 3 years, 5 years actually. So what you can see is that when the market does not do well, during the bear market of 22, that's when gold outperforms the S&P. And when the market is doing really well, like in 2021, then the S&P significantly outperforms gold. And you can see here in 23, the S&P was doing better, so the S&P was outperforming. And it looks like right now, ever since basically middle of last year, gold is now beginning to outperform the S&P. So we'll see if that will continue, and that may signal that the market may be looking to decline if gold keeps outperforming like that. Now, in this case, gold versus the S&P down here, it is right at the zero line. So it's basically returning the same as the S&P. And dollar is underperforming, and bonds clearly underperforming down there. Now let's go look at gold versus silver, which was actually the question. So in this case, I divided this into two pieces. The top part is the absolute performance. So this just takes a date 1 year ago and just tracks the price of gold and silver starting a year ago. And it doesn't start them at zero in this case. It just starts 1 year ago. They were pretty close a year ago. But you can see silver started to run up more in the May to August timeframe, and then gold took over. Silver pulled ahead of gold right through here in October. And then gold right now is pulling ahead of silver, and it looks like silver is actually rolling over a little bit. Now, the one below is a relative performance. So that means gold versus silver. And and in this case, actually, it's gold versus silver in a performance, relative performance based on the 0% line. So this basically shows you the percent gain for each one of these. And they both start at exactly 0 1 year ago. So you can see silver has been outperforming gold for the whole year, all year long, and it's just now starting to pull away from gold. So I don't know if it's going to that little curl over is going to bring it back and meet gold again, but it has actually been outperforming gold for the last year. So that's gold and silver. That's what I wanted to show you there. So the last thing I want to do, and to start this, I'm going to show you Stock Traders Almanac. You've heard me talk about Stock Traders Almanac. They do a fantastic job of market history and what's happened with the market over the years. They're actually fairly reasonable. They actually did a presentation for members today, and I'm going to show you some of the things that they showed, which is very interesting. But I wanted to make sure that you knew how to get to their website. First of all, stocktradersalmanac.com, and show you the prices if you wanted to subscribe to their service, which I highly recommend. It's an invaluable service to really track the market and see what the market has done historically. So let's take a look at what they presented today. And I'm not going to show all of these slides. I'm just going to show specific ones. But it was very interesting. So here's the takeaways. Now remember that they go back 75 years. Jeffrey Hirsch, his father, is the one that started the company, and then he took over from his dad. So 25 forecast base case, 8 to 12% is on track. I will caveat that by saying he also suggested that it is very likely to get a 10% correction sometime during the year. So this 8 to 12% is not going to be straight up. There will be chop. February is the worst S&P 500 month in post-election years. Tune out the noise. Don't listen to the news media, everything they're saying about tariffs, et cetera. Positive January barometer gives us a green light. Inflation is still in check. Small caps and market breadth improves, although small caps still need to catch up. And then commodity, Bitcoin, and oil and gas. So best case, 25% probability is 12 to 20% gains. Base case is 8 to 12%. Worst case, I think it'll be teetering on a bear market recession. So here's where we are right now. The orange line right here, this is post-election years, which is what we are in. So right now we overbought. So we exceeded the trend, and this is going back to 1949, so 75 years. But now we have reverted to the mean. So we're right back on trend again. And you can see the trend for February is kind of sideways. And then we start moving higher A little bit of choppy in March and April. And then starting in May, this is the S&P. The S&P trends higher. There might be a big downdraft right here in July, which is usually when the cyclical bear markets happen in July, and then they often recover in October, right in through here. So this period right here might be a little dicey, but 8 to 12% gain by the end. This is the 4-year cycle. This is the presidential cycle. Make that bigger. So we're over here in post-election right now. This is where we are. You can see downdraft is ahead of us, perhaps, and then the market starts to take off. And then the midterm is where is usually the worst part of the 4-year cycle. And then at the end of the midterm into pre-election year is the best part of the 4-year cycle. So that's where we are right now. This is the presidential election cycle week and sweet spots. So you can see over here, this is where we are, Q1. Not much happens in Q1. This is the Dow, the S&P, and the NASDAQ right over here. This is, what happens with a Republican versus a Democrat president. Basically, a Republican Congress is usually the best. So this is a Republican Congress right there. Go back. This one here is a Republican Congress with a Democratic president. That's the best performance. Republican Congress over here is the best performance. That's what we have right now. This is a market performance over here. So Republican Congress is the best. And then the next is Democratic president with a split Congress. That's interesting. The January barometer was positive, and the comment he made was that 88% of the time the market is higher by the end of the year when that happens. So even though it might not feel like it right now, and even though we still might get a 10% correction during the year, by the end of the year, it should still be positive. This is the bounce after December low. So this is the kind of research that they do. They look at, so you can see the yellow line over here for 2025. This is the December low, and then it went even lower. So usually when that happens, the market trends lower before going back. But in this case, it didn't. It actually started to take off right away. So we're kind of following this the blue line right now. We'll see how that works out. The Russell usually should be outperforming right now from November until basically right into January. And you can see this is the seasonal trend down here, but it is not following the seasonal trend right now. Trying to come back a little bit today, but it's going against trend. You can see it right here. So the orange is the Russell 2000, still lagging. So maybe it's just delayed and maybe it will take off like this, but right now it's not looking that great. I've shown this one before. This is the February market performance. I'll touch on that again later. Summer highs, real GDP percent change from preceding quarter. You can see GDP has actually gone down slightly, but still positive. And it went down in 23 as well. So 23, these two quarters, went lower. Q1, it went lower, and then it popped back again. So Q4 was lower. We don't know what Q1 is going to be yet. Unemployment, I've talked about before, 4.2%. That was the 10-year note. I'll look at that in a better chart in a minute. They do not expect a cut before June. So if there is going to be a cut, it likely will be in June, and it might be the only one, barring any unforeseen circumstances. So that's what Stock Traders Almanac suggests. Bitcoin, he's now tracking Bitcoin. However, he's doing it in the same charting mechanism as the equities, which don't account for weekends, and Bitcoin trades on weekends. So one interesting point somebody asks is, what about the gap up that Bitcoin had last year? Is it going to fill that gap? Well, Bitcoin trades around the clock. So there really are no gaps with Bitcoin. It just trades. It could go sideways during that period, but because it's trades overnight, there really aren't any gaps. So the interesting thing about this is where we are over here, the pink line. The blue line, actually all years, is the black line. the blue line is 2011 to 2017, and the green line is 2018 to 2023. So the green line, I think, is probably more representative based on where we are right now. So it suggests that Bitcoin will be higher by the end of the year. And basically, it's going to go from essentially 10%, about 70% higher. We'll see. January chop, though. That's what we're experiencing now. Bitcoin's next best 3-month span is February to April. So it actually could keep chopping until the end of this month. And then you can see right here, its best months are February to April. Commodities, gold, crude, natural gas. So all the rest are just their own portfolio. So this is their recap outlook. So this, I'll just go through this. It's the last slide. Headwinds, inflation, 10-year, geopolitics, economy, Trump 2.0, labor we have to watch. That comes out this Friday. So we'll take a look at that tomorrow. Tailwinds, inflation steady, Fed rate cuts, GDP continues to grow, government spending. This could change, though. Post-election recent strength, and then Trump 2.0 deregulation and tax cuts will be good for businesses. So the outlook is a choppy market, more new highs, fewer rate cuts, economy resilient, jobs market stable, Q1 weakness, and potential for a 10% correction. But in general, he was pretty bullish on 25 by the end of the year. And he said he doesn't really see any major issues until probably 26. We'll see if that's true. This 10% correction is what I'm expecting to see at some point this year. But right now, the market has been extremely resilient. And if we look at the S&P, actually, we'll look at the dashboard. That'll show you. So equities, you can see right here, there's mid caps. Here's the Dow, just went up today. S&P went up. NASDAQ 100 went up. VIX went down. So all of that is very good for stocks. On the sectors, discretionary communication services are at the bottom, which is Tesla and Google. We're going to get Amazon tomorrow, so that's also in discretionary. And technology is near the top. So it was a mixed market for sectors, down industry groups. Semiconductors is the second of the top 10. So that's good. Telecom equipment is up there too. And these are some of the ones from our top 10 list. CRNC, which is interesting, might be trying to make a comeback. This one is also an interesting one. This is a software company too. So just to give you an idea. The worst ones, NXT is on the end of the list. One of the worst performers, WGS. Again, one of the worst performers, Lunar. So these had all been in the top 10 at one time. App has been in the top 10 consistently. So it looks like it's starting to pull back. Here's MicroStrategy. Even though Bitcoin actually didn't do too bad, it probably pulled back about the same as MicroStrategy, actually. And here's Tesla right here. So on the second page back of the worst performers. All right, the last thing I'm going to show you is the relative rotation because someone asked me to do that. So I'll try to do it every day. Those are the sectors right now. And you can see all of the defensive sectors are in the lagging quadrant. All of the aggressive sectors are in the leading quadrant. However, communication and discretionary are rapidly moving lower. So that's Tesla and Google that's creating that issue right there. And then technology is now trying to make it up into that upside. So real quick, last thing, I'm going to look and see what the earnings look like. So here's the earnings. I'll do NASDAQ 100. And anyone can get to this. You don't need a subscription either for stock charts or for my website to do this. MicroStrategy reported after the close. Let's take a look at what they're doing. Down a little bit, not much. So didn't move too much. What else? Amazon is tomorrow. It's not Qualcomm's right here. Qualcomm down almost 5%. So they must have missed earnings. Almost 5% after hours for Qualcomm. Anything else interesting here? ARM Holdings is another. That's another semiconductor stock, also missed. So they're down after hours as well. So semis might have a problem tomorrow. And then you can see tomorrow, these are all today's actually. Let's see what we've got tomorrow. Quite a few today. We're probably getting close. Next week, I think, is nearing the end of earnings season. Here's another semiconductor. Let's see what they did. Also missed, down 16%. So semis probably are not going to look too good. A lot of them today. You can see how many are today. So I'm not going to go through all of those. These are the ones that reported already. And you can sort them however you want. So these have already reported. You can kind of see the results over here. Qualcomm said it's up 6%, but they must have said something. Hell, AMD was yesterday. So AMD missed. So we looked at that last night. So we'll take a look tomorrow. Tomorrow's going to be interesting because we have Eli Lilly and we have Amazon, two big ones to take a look at tomorrow. All right. Thanks everyone for watching. Please like and subscribe if you want me to continue to do this. And give me any comments. Let me know if there's something you want me to take a look at. Oh, you know what? There's one more that somebody asked me about. So I want to do this so he doesn't get mad. This is TEM, Tempest AI, medical equipment. Not sure exactly what they do, but Nancy Pelosi bought it. So this is the gap up right here. He bought it, I think, right after that, the day after, right there. You can see that it has a little bit of a double bottom down here, which is good. And the resistance is going to be right about here, right about there, which is almost at right now. So likely it's going to maybe pull back from here, but probably not a lot. So if there's a little bit of a pullback, that should be okay. I think all the way down here, down to about 55, would be okay for a pullback. Much lower, much under that though. It's going to be hitting the 21-day pretty soon. So I wouldn't want to see it go lower than that. But everything looks positive. There's no reason to sell this right now. Everything, the momentum is going higher. It's above zero. It's above the cloud. The ADX is going higher. I mean, everything actually looks pretty good on this one. So that's one I'd probably hang in there. I think he does have a trailing stop, which is always a good idea. And we'll see. It's going to run into resistance when it gets up to these levels for all these people that bought back here that want to get out. But overall, this looks pretty good. Nancy Pelosi is a brilliant trader, apparently. So I guess maybe a strategy is just follow her trades, do whatever she does. So that's it. All right, that's it for tonight. Thanks for watching, and I'll talk to you again tomorrow. Let me know if there's anything you would like me to look at. Thanks, everyone.